What is going on with Mantra DAO, with the Ohm token? We had our massive crash in the past, but today things seem to recover. The question is, how much longer can this rally last? Does it make sense to buy this bottom now? Let's have a look at the on-chain metrics. Let's try to figure out what's behind all of this. Now, we all remember what happened with Ohm. At one point, the token was above $8. Now we are at 43 cents. The last month hasn't been too great either. We tended to trend down. And that's probably because there's still long-term selling pressure. Many people that bought Mantra DAO, they got into it because of the real-world asset narrative. The project was one of the largest in the space, but now that's very different. Ondo Finance has a market cap of 3 billion. Mantra DAO plummeted to only 400 million. Now, this channel covered Mantra DAO from the early days, even before the crash. We were raising the red flags. The issue was that the total value locked, or the usage of the chain, was much lower compared to its market cap. And that actually has still not changed. Have a look at this. The total value locked of Mantra DAO is now only $15,000. And even in the past, it wasn't really that large. It was only 15 million. The market cap, again, is in the hundreds of millions. So really, it's not the capital that's on the platform that's attracting that valuation. We've already seen a crash, but is that current valuation justified? Are maybe the tokenomics that great? As in, is there potentially a shrinking supply that might push up the price? Unfortunately, the answer is no. Mantra DAO continues to get more and more supply over time. The supply will get issued. The reason for the recent crash was probably over-the-counter selling. So there was this interview of the Mantra DAO founder with CoffeeZilla. And what we learned from that interview is that the project did OTC deals. So they offered the token to external investors for a discount because they didn't want to wait for the official unlocks. The team wanted to already get the cash before the official unlocks happen because a lot of people might sell before those unlocks. Now, when the team is selling their vesting allocation, but those tokens haven't yet unlocked, how is it possible that the price crashes anyways? The answer is perpetual futures. Because here is what's happening in reality. There are bets on the price on various platforms, on Binance, on OKX, etc. The perpetual futures market. So you're not trading the token directly, we're just betting on the price. Now, very likely what a lot of those OTC investors did is they bought the allocation of Ohm and then they got Ohm exposure. They had to wait until the unlock happens, but they wanted to hedge themselves. They wanted to lock in that discount profit directly. And so they shorted Mantra DAO on the perpetual futures market. And when there's too much of an imbalance between the spot market and the perpetual futures market, what we're seeing is that the spot price follows. So all of that short interest in Mantra DAO on the perp market drags down the spot price. And that's then what the founder called as deleveraging. There was just so much leverage in the market, but actually it's just the over-the-counter dealers that hedged themselves, that locked in the profit from those OTC deals. So there is direct impact on the price, even though there's no official unlock yet. And so that's why we can't trust unlock schedules like this. We don't know how much the Mantra team has already sold. And so here's what I mean. In the last 24 hours, we saw only 75 million worth of spot volume on Binance. When we compare this with the perpetual futures, there's much more. There's more than 400 million. So the price discovery really happens on the perps, not on the spot market. Now, this is one way to look at the price. This is now Ohm relative to Bitcoin, but it's just on a linear scale. Here's the same on a logarithmic scale. And this puts the current crash into perspective. We actually have not corrected all the way from the initial purchasing that started in December of 2023. So it seems like the Mantra DAO already sold off quite consistently their allocation in the past without making this public. But it seems like with each selling of their allocation, the team got less and less funds back. So what seems to have happened is some kind of a contract in those OTC deals, that the proceeds need to be used to push up the price. And so spot market was positive, the perp market was negative, and then at some point we saw how the two worlds collided and we got the deleveraging. And so really there's probably no flaw to this. Mantra DAO can still fall another 90%. At least that's relative to Bitcoin. And that also implies that the team will just continue to do those OTC deals. There was just so much eyes on the topic that that's a question if the team still has the courage to do so. Or will there be more and more question marks? Will there be investigations by the SEC? If that's true, probably things could stabilize. But yeah, just have a look at the open interest of MantraDAO over time. So this is how much the shorts have to pay the longs when this is deep in the red. So the vast majority of those perp bets were betting on falling prices. Again, when you are currently allocated with some tokens that vest in the future, you want to hedge yourself by betting on falling prices. You don't want to get exposure to OM. And so apparently this is how I interpret the data. There was probably some secret selling via OTC on the 23rd of February, then again on the 19th of March, and then came the unwinding on the 15th of April. And so you can clearly see how the open interest rose on those days as well. So there was more and more capital in the bets on MantraDAO with those OTC deals. It's also interesting how much money the market makers make during a crash like this. When the price went down, it was not just the longs that got liquidated, there were enough shorts that bet on falling prices, and then because of the volatility during that crash, those shorts got liquidated as well. So we don't just have long liquidations, we have massive short liquidations during the crash as well. Isn't that interesting? Now, after so many years in crypto, I think there's only two strategies to make money in this market. It's either trying to find altcoins very early, potentially using wallet tracking, buying things before the masses do. And while this is a strategy that can work, it's also comparatively risky. Things like Virtual Protocol or SPX 6900 went up massively this year. But if instead you bought Optimism or IMX or Polygon, you wouldn't have had such a nice time. Now with small bets, a few $100s here and there, the strategy does make sense. But for the vast majority of the portfolio, we have to take less risk. Now, the common narrative is that this less risky bet is simply Bitcoin. And while it's true that there's less risk in Bitcoin than in many altcoins, the price can still go down by 77%. So what can we do? I think the answer lies in taking advantage of crypto's market structure. Most altcoins underperform Bitcoin most of the time. So for example, have a look at this again, right? This is the performance of the top 100 cryptocurrencies in the last year. Again, SPX 6900 outperformed everything else. And here at the bottom, we see Bitcoin. So in the last year, Bitcoin appreciated by almost 72%. Now, how many altcoins outperformed Bitcoin? It's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. Out of 100 altcoins, 17 outperformed Bitcoin and all of the others underperformed. And so with a larger part of the portfolio, we can take advantage of this market structure. So instead of buying Bitcoin, we can buy this here. Now this is the exact same time frame that we see in those charts. What we see here is again a Bitcoin chart, but it's slightly different. It's not Bitcoin relative to the US dollar, it's Bitcoin relative to Balancer. So what we are seeing here is Bitcoin's relative performance to one of the altcoins, an altcoin that tended to underperform over the long term. Now, why do we see that constant outperformance of Bitcoin over the alts? So it's not just that most altcoins underperform, it's also that the underperformance tends to be rather constant. The reason for this is tokenomics. It's an expanding token supply. Because that's how the venture capitalists and the members of the teams of all those projects make their money. They've got a vesting schedule. They get a token allocation, but they can't sell directly. They have to sell over time, and that depresses the price relative to Bitcoin. Yes, on bullish days, everything is going up. But when we zoom out a little bit, most altcoins are not doing as well as Bitcoin. Now, this is not common knowledge, but we can actually set up a position in a portfolio in a way that we make money when the relative performance of an asset versus another one is going up. So we don't have to bet on the crypto macro. We don't have to bet on Bitcoin going up or down. We can just make money when something outperforms or underperforms. Now, I've made several tutorials on that topic, how to profit from falling prices or gaining from relative valuations, or over here, how to win in bear markets by shorting altcoins. Now, it's not important what the macro is doing if we focus on the relative valuation. Again, the nice thing about the strategy is that it works in any market condition. At the bottom is again Bitcoin. Bitcoin has its massive crashes And the largest retracement that we saw in this chart was maybe 50%, while the gain was much, much larger. So this is an 8,000% gain in relative valuation, while Bitcoin itself only made 100%. And so I'm of course sharing my own trades as well. Check this out. This is where I opened a short position, a relative short position on the Trump token. That was on April 30th. What we see here is Trump relative to Solana. Some community members entered the short as well. And then I closed the position a few days later for a gain of 142%. Now I actually shorted Trump twice, so this was an earlier trade. And again, here are a few other trades that our community members are making. So if we set this up right, if we've got risk management and hedging properly in place, there is real risk-adjusted alpha in positions like this. And so of course I shorted the Trump token again because of the tokenomics. Over time, the Trump supply increases. And it's really important to understand this concept. I believe that risk adjusted, if you want to make large bets, not just a small bet on the altcoins that might do 100x, if you want to bet a lot of money of our portfolio, then we have to bet on something that risk adjusted performs relatively consistently. So this is Trump in US dollars. And if you just bet on Trump going down, then when the market itself is appreciating, you've got a problem, right? Over this time frame, Trump did not go down. However, Solana relative to Trump went up. So that's the exact same time frame. That's a gain of 35%. So it's all about looking at what tends to do worse relative to something else over time. And how to set up those positions is explained in the videos over here. And so feel free to check it out. It's currently $125 per month. It used to be 165 at the peak of the bull run. Now attention is still relatively low, and so you can lock in the lower rate. I will not increase the rate for anybody that's already subscribed. Only the people that sign up when everything is hyped, they will get the higher price. But if you sign up now, you lock in that price. If it's your first time here, feel free to subscribe. I publish here regularly. A like would be very much appreciated as well. It helps the channel grow. Feel free to also check out Premium. Again, the link should be somewhere over here. You can just click on the link here. It should bring you to the website. And so yeah, see you next time on YouTube or see you in Premium. Cheers.